We are seeing people in Florida who are losing their homes. HOA fees are skyrocketing, and homeowners insurance is skyrocketing. In some cases, home insurance in Florida has jumped 40% from last year alone. So here's how to protect your wallet. Now imagine this. You're finally in your dream Florida home and palm trees are swaying outside, but then your insurance bill hits and it's skyrocketing so high you can't even cover your mortgage. Sounds like a nightmare, right? But it's happening, and it's happening right now to thousands of Floridians. In fact, it's forcing some to sell or even face foreclosure. Now, if you live in Florida or you're thinking about buying there, this video could save you thousands. So give me a thumbs up if you're good with that. Now, I'm going to hit you with the cold hard numbers. Did you know that the average annual insurance cost in Florida is now over $6,000? That's more than double the national average. And in high-risk areas like Miami or Tampa, it's pushing $10,000 or $12,000 and even more. And it's happening year after year after year. But why is this happening? It's not just bad luck. It's the perfect storm for several factors that are happening all at the same time. Don't go anywhere because this is going to save you money and heartache, and it's eye-opening. I'm going to show you the top 3 culprits behind this surge, starting with something you might not even expect. Reason number 1 is hurricane and risks. Now look, we already know that Florida is a love-hate relationship with Mother Nature. It's nothing new. It's always had hurricanes, but they seem to be hitting year after year after year. Do you remember Hurricane Ian in 2022? That one caused $112 billion in damages, and insurers are still reeling, and they're trying to catch up from just one event from 3 years ago. Now, fast forward to 2025, and with amping up storm season, companies like State Farm and Allstate, they've already pulled back, leaving fewer options and higher rates from those other insurers that are left. But here's the real kicker. The reinsurance cost, now that's the insurance that insurance companies pay to have insurance, has tripled. So what that means is your premium isn't just covering your roof, it's padding a global reinsurer's pocket. And if you're in a flood zone, you can add another 20 or 30% hike. Sounds crazy, right? But wait, there's more. Up next is a sneaky legal issue that continues to jack up prices even further. Now, have you ever heard of assignment of benefits fraud? It's like having a hidden tax on your policy. These shady contractors, they convince homeowners to sign over claims, then they inflate their repair costs and then sue the insurer. Florida has seen a 500% spike in these lawsuits since 2019, and it's driving insurance companies out of the state or their premiums are skyrocketing. Now the result is your rates soar just to cover these legal battles. But don't worry, here's the good news. Reforms are coming. I'll tell you how the new laws in 2025 can finally tame this beast. But stay tuned for reason number 3, which ties directly to why mortgages are becoming a lot more unaffordable. The reason number 2 is the litigation explosion. Now, building on that, litigation just isn't a buzzword. It is a crisis in Florida because Florida accounts for 79% of all U.S. insurance lawsuits, despite the fact that there's only 9% of the claims in the United States. Crazy, right? Insurers paid out $3.5 billion in legal fees last year alone. Now, if you've ever driven through Florida, you've seen the billboards. They're everywhere. And that's why giants like Farmers Insurance just pulled completely out of the state of Florida in 2023. And even more insurance companies left the state of Florida in 2024. And it's happening again this year. So here's the deal. With fewer providers, competition drops and premiums soar. It's the supply and demand issue. But there is a twist, because the state's 2025 insurance reform bill, that aims to cap lawyer fees and speed up claims. Could this drop rates by 15%? Well, early signs say yes, but that's only if this thing sticks. Okay, but the big one is how inflation and supply chains are the silent killers here. Now you think insurance is immune to everyday economics. Oh no, think again. The pandemic inflation drove up building material costs by 25% from just a few years ago. Everything from lumber to roofing. And insurers, they're now factoring this stuff in, and they're assuming that repairs will cost even more in the future on the next storm. Plus, global supply chain snags, simple roof fix that cost $10,000 5 years ago, it's now $15,000 or $20,000 easy. And this is the ripple effect that is hitting every single policyholder. But here's where it gets personal, guys. Floridians have called me and told me that they're losing their homes because of this. You won't believe what happened to one couple in Orlando. Now this makes it real when you hear this stuff, but You want to take Mike and Jenny, and they're from Orlando. I'm not giving the last name. They bought their home in 2020 for $350,000, and their insurance was $1,200 a year. But when we fast forward to 2025, the renewal is $5,800. Okay, that doesn't sound like a whole lot, but it's an extra $300 a month that they didn't budget for. With their mortgage of $2,800 monthly, they just couldn't swing it. So what they do? They refinanced. But the higher interest rates meant that their total payment jumped another $500. So now they're selling at a loss and they're moving out of state. Now, Mike told a local news station, "We love Florida, but we just can't afford to insure against living here." That's crazy. And this isn't a rare incident. Over 15% of Florida homeowners report struggling with premiums that tie up their mortgage funds. But wait, there's more. It gets even darker. Let's look at the statewide trends that could make you rethink this game plan. Now, when you're zooming out in 2025, South Florida is seeing the worst in Broward County. It's up 55% year over year. And why is this? Because of the flooding risks and the storm risks. But even the Panhandle is not a safe zone. Post-Hurricane Sally, rebuilds have insurers super nervous. Recent bank rate study showed that 1 in 100 Florida mortgages are underinsured. Now just think about that. If anything happens, they're risking default. That's a foreclosure that's waiting to happen. So my question is, are you experiencing any of this? Go ahead, drop it in the comments. But I want to show you how this crisis is reshaping the entire mortgage landscape, and lenders, they're changing the rules, and it could lock out first-time homebuyers. Impact on mortgages. So how does sky-high insurance wreck your mortgage? Lenders always require insurance to protect their investment. And if you have a mortgage, you got to have insurance. The bank can call in your note if you don't have insurance. Now, think about if you can't afford these higher Florida insurance costs and the escrow payments balloon, or worse, your loan gets called. And it's happening. Here's the facts. In 2024 alone, Florida saw a 30% rise in forced placed insurance. Now, that's where banks buy it for you at premium rates. If you can't buy your insurance, the bank is going to buy it for you, and it will add hundreds to the monthly basis. The hidden explosion is this pushes up debt to income ratios over the limit, killing the opportunity to even refinance that. So for buyers, it's a double whammy. It's a double hit. And higher closing costs and stricter underwriting. This is all becoming the new issue. But there is new information coming out, and Fannie Mae has a 2025 pilot for bundled insurance and mortgage products that could easily fix this problem. Still, without any action, the experts in Florida real estate are predicting a 10% dip in home sales. And there's shifts to the market, but could they be shifting for buyers to renters? Absolutely. Could they be moving to alternative states? Absolutely. But hold on, there is a solution for savvy Floridians, and they're using it to fight back. So I've got a question for you. Are you feeling any of this pinch? Put it in the comments. Now, I've got something that may help you. Here are ways to slash your premium. Now, first off, you want to shop aggressively. And if you didn't know this already, use brokers and compare up to 20 plus insurers, because a broker will do that. A single insurance company is only going to look at one. And if you up your deductibles, in some cases, you could see a good savings. Now, one of my clients who owns a second home in Florida, they saved $1,200 last year by doing that. However, that's just the basic stuff. Next, I'm sharing several solutions to help you earn your home's wind mitigation credits. And this is the stuff that could cut your cost by 40%. But I got to tell you, here's the disclaimer. I'm not an insurance agent. I'm not an attorney, and I'm not an accountant. I'm just trying to be helpful here. I sure hope you appreciate it. Solution number one is practical tips here. Tip one, invest in mitigation. What does that mean? Florida offers credits for storm-proofing features on your house. So if you have a reinforced roof, it's up to 25% off. How about impact windows? Another 15%. Or a $5,000 investment here, guys, could save you $2,000 yearly. So you got to look at the return on your investment, the ROI, in under 3 years or even longer, but it's still a savings. Tip two is raise your deductible to $2,500 or more, and in some cases, premiums will drop 10 or 20%, but only do this if you've got the emergency fund and the cash sitting in the bank, because basically you're helping to self-insure this. And tip three is join FAIR programs if private insurers bail out on you, because it's Florida's insurer of last resort, and the rates will be higher, but what's new in 2025 is Citizens Property Insurance is expanding the eligibility, some people that couldn't get it before. And it's actually helping 200,000 more folks than it previously had. But These are just band-aids, but the real change needs bigger moves. Don't you agree? Or do you disagree with this stuff? But here's the deal. There are groups such as Floridians for Fair Insurance, and they're lobbying for federal backstops, similar to the California wildfire funds where people will pitch in. Or there's also a proposal in 2025 that could cap rates at 10%. And that, if it passes, is a total game changer. So in the meantime, what do you think? Will rates even out? Will they keep climbing? Go ahead and put it in the comments. Here's what the experts are actually saying about this. Looking to 2026, the analyst from the actual Insurance Information Institute predicts a stabilization as long as there's no major hurricanes that hit. But Florida is the #1 hurricane state in the nation, and storm season can be brutal. If we see any action, they're saying that we could potentially see another 15% jump. So there's the balance. But on the bright side, tech like AI risk modeling might be able to personalize rates down for low-risk homes. And if these reforms hold, some have said that there might be an 8 to 12% drop by mid-2026. I don't know. But for buyers, wait if you can, or target inland spots where premiums might be 15% lower. And if you're looking to move to lower cost places, I've done several videos here on this channel about the best areas as alternatives. So there is a wild card to this whole situation though, guys. As someone who's been helping people for over 2 decades, I've seen cycles. And it may not be what you want to hear, but it's the truth. Are you good with that? Look, today, things are similar. Back in the 80s, we had high interest rates and things were unaffordable and people couldn't afford it, but people made their way through. But here's the word of advice. You're going to have to either adapt to these higher prices or you'll have to get out and move to a state with lower costs. I know it may not be what you want to hear, but that's the truth. Now, if you're in Florida, one client of mine in Tampa, they bundled their flood insurance separately through FEMA, and it saved $800 while keeping their mortgage afloat. But lessons like that could be very helpful, right? But Florida is on the radar for many retirees, and insurance might cool that action. Overall, this insurance mess is slowing Florida's sales down just 7% in the second quarter of 2025. And for everyday folks, it's a wake-up call. You got to budget 2 to 3 times the national insurance averages, and you got to bring your checkbook. But the key to this is knowledge is your shield. And if this video helped you, smash that subscribe button, drop it in the comments. Has your insurance premium horror show come about? Have you seen any action? Is it up? Is it down? What's going on with you? Just want to say thank you so much for watching. I truly appreciate you doing so. And just remember, in real estate, it's about staying ahead of the curve because real estate's hyper-local. You've heard me say this before. What's happening in one part of the country may not necessarily be happening in the other. I'm Jerry Pinkas, your real estate expert, and I'll see you in the next video. Take care, guys.